All right, let's get right into it. Today, we're going to put on our detective hats and do a deep dive technical investigation into one single, really fascinating stock. So, here's the big question we're trying to answer today. You've got a stock trading for just 17 cents. I mean, think about that. Is this thing on the verge of collapse, or is it a coiled spring just waiting for the right moment to bounce back? We're going to follow the evidence piece by piece and see exactly where it takes us. Okay, so who's our subject? We're talking about CCSC technology, which you'll find trading under the ticker CCTG. Now, this is a small cap tech company on the NASDAQ, and if you follow this space, you know what that means: volatility. It's going to be a bumpy ride. So let's fire up the charts and see what clues they've left behind for us to find. All right, first things first. Every good investigation has to start by establishing the scene, right? Well, in the world of technical analysis, the scene is set by one thing: the price. It's our first and, honestly, our most important piece of evidence. And there it is. As of the date this analysis was done, CTCG was trading at just 17.5 cents. Wow. I mean, this is classic penny stock territory. It's a price that just screams two things at you: super high risk, but for some people, super high potential. But, a number by itself doesn't mean much. We need some context here. And boy, does this slide give us that context. Look at this. On one hand, you've got the current price, 17.5 cents. But then, look at the other side. Its volume-weighted average price, or VWAP for short, is a whopping $1.73. That's not just a drop, that's a fall off a cliff. We're talking about a nearly 90% drop. This tells you right away this stock has been through a really rough time. Okay, so we know the backstory, we know where it's been, but the real question is, where is it going? To get a feel for that, we're going to pull out our first set of tools: the moving averages. These are great because they help us cut through all the day-to-day noise and see the real underlying trend. The best way to think about a moving average is like looking in the rearview mirror of your car. It's not going to tell you what's around the next corner, but it shows you exactly the road you've just been on. It gives you a sense of your trajectory. And the rule of thumb is pretty simple. If the current price is above the average, that suggests some upward momentum. If it's below, well, you get the picture. And wow, this table tells a really interesting story. Let's break it down. Look at that top row, the 5-day average. It's actually below the current price. Okay, that's a small positive sign, a little glimmer of hope. But then, your eyes go down to the 10-day and especially that 50-day average. They are way, way above the current price. So what's the takeaway here? Well, it means that even though we've had a tiny little bit of good news very recently, the bigger picture, the dominant trend, that's still pointing straight down. So the long-term downtrend is pretty clear, right? No denying that. But is the energy starting to shift? Is something changing under the surface? That's where we bring in our momentum indicators. Think of them like a seismograph for stocks. They're trying to pick up on the very first, tiny tremors of a change in direction, before it turns into a full-blown earthquake. And our first momentum tool is a classic, the MACD. It sounds complicated, but all it really does is watch the relationship between two different moving averages. When they start to pull apart or cross over each other, the MACD flashes a signal. It's kind of like an early warning system that the stock's momentum might be about to change. Okay, now this is interesting. This is our first really significant bullish clue. Now look, the MACD lines themselves are still in negative territory, but that histogram, that third number there, it's actually positive. What that's telling us is that some upward momentum is starting to build, even if it's just a little bit. It's a hint, a potential sign of an early recovery. All right, next up, we have the RSI, the Relative Strength Index. I love this one. I always think of it as the stock's power meter. If it goes above 70, it's a sign the stock might be overbought, kind of running out of steam. But if it drops below 30, that suggests it's oversold. And maybe, just maybe, it's undervalued. So where does CCTG land? Its RSI is 37.52. Now, technically, that's in the neutral zone. But let's be real, it's a lot closer to that oversold line at 30 than it is to the overbought line at 70, right? So this is another clue for our case file. It suggests that all that intense selling pressure, it might finally be running out of gas. But just when you think you've got it figured out, bam, analysis is never that simple, and this slide is the perfect proof. We've got two related indicators here, called stochastics, and they are telling us completely opposite things. I mean, look at this. The main one on the left is at 26, which is screaming oversold. But then this other, faster version on the right is pegged at 100, literally the maximum overbought reading possible. What does this even mean? It tells us that while the bigger picture momentum is weak, there's been a really sharp, very recent burst of buying. The main takeaway here? Things are complicated. Okay, let's take a breath and recap. We've got a stock that's been beaten down, way below its old average. We have a clear, long-term downtrend, but we also have these little signs of life, these flickers of positive momentum. So it's time to put all the clues on the evidence board and figure out what the final verdict is. So let's put it all on the scales and see how it balances out. On the maybe this thing could go upside, the bullish side, we have our momentum indicators, right? The MACD histogram is positive. The RSI is getting close to oversold. The main stochastic is already there. These all whisper that a bottom might be forming. But then you look at the other side of the scale, the bearish side, and the evidence is heavy. You've got that powerful, long-term downtrend and a price that's just a shadow of its former self. So after all that, after weighing all these conflicting clues, what's the final score? The big reveal? It's a 5 out of 10. Yep, smack dab in the middle. Perfectly neutral, it's not a buy, it's not a sell, it's the ultimate wait-and-see signal from the technicals. So that brings us to the bottom line, the actual recommendation from this analysis. And it's a really interesting one. It's cautious, for sure, but also kind of opportunistic. It basically says, hey, you might consider buying this thing if, and it's a big if it can prove it has a solid floor at 15 cents. But then it adds something that's absolutely crucial. Watch for news. And that's such an important reminder, right? The charts can tell a story, but that story needs a real-world event, a catalyst to actually change the ending. And you know what? That's the perfect place to wrap up our little investigation. The numbers, the charts, they've shown us a stock that is truly at a crossroads. It's a battle between a really bearish past and these first little whispers of a bullish future. The technical analysis, they gave us all the clues, but it can't write the next chapter. So we go back to our original question. Could this be a comeback story? The charts say, maybe. But the real answer? That's going to be written by the company itself.